All right, Trade Pros, good morning. Welcome to Morning Market Update. It's Thursday, June 11th. We're almost halfway through June. The time's flying by. I hope you guys are having a great day. Hope you're seeing what's going on here in the market. Off of yesterday's highs, we're down about 130 some odd points. Pretty big of a sell-off here. For today's session, we're going to talk about why that is. And actually, we're not 100 points off of yesterday. Well, yeah, we are. Off of yesterday's high, we're at 28, down, 130. All right, let's talk about it. So Jerome Powell yesterday, we said it could be a big meeting at 2 p.m. All right, and it was indeed a big meeting at 2 p.m. He said some pretty interesting stuff, Jerome Powell did, from the Federal Reserve. All right, we need to discuss it because on Friday, I was one of the people who had got some put options on this market. I said, look, this amazing unemployment report, it's just too euphoric. This is a great level to put on some downside protection or a downside speculation trade. And it's paying off to them. Probably going to take some profit, see if I can extend it down a little bit further. I think 2950 is a support here on the S&P, down to as high as 3,000. All right, so in that 50-point marker, I think there's going to be some support. Okay, will it go down vertically? I don't think so. I think there's going to be some back and forth, but we are on the bearish note. The pullback is coming. All right, let's talk about why. Jerome Powell, first of all, the good news, said that he's going to keep interest rates near zero for years into 2022. When I talk to people about mortgages and their lending in my personal life, like, but George, what if the interest rates go up? And I told them, look, we're probably going to die with low interest rates in our economic system. Okay, I don't think interest rates are ever going to go up. They just can't. All right, interest rates can't go up when so much debt's been created. So Jerome Powell admitted the inevitable. We all knew that. Nobody was surprised that they're going to keep interest rates near zero for years. All right, it was known, but now it's acknowledged by Jerome Powell. So first of all, that says two things. Number one, the market's going to have free borrowing for a long time. All right. Number two, Jerome Powell doesn't think the economy is going to increase a lot to sustain a rate hike. That's really what he's saying, what the market doesn't like. All right. Number three, there goes bank earnings for the next couple of years. All right. Because how do banks make money? They borrow cheap, lend it out more expensive, make the spread, net interest margin, NIM. That's their whole business model. All right. Also, he kind of undercut the whole notion of a V-shaped recovery when he said this. Okay, he said, my assumption is that there will be a significant chunk well into the millions of people who don't get to go back to their old jobs. All right, and there may not be a job in that industry for them for some time. It could be some years before we get back to those people finding jobs. That's pretty gloomy from Jerome Powell. I think it's a good thing. I think if you lose a job, it shouldn't be available for you later on. You should find a better one. All right. Forget about going back to the old job. Screw the old job. Let's move forward and find something better. All right, but anywho, that's what he says. On the economy, he said the Fed sees GDP plunging 6.5% total in 2020 before bouncing back to 5% again in 2021. So he's pretty much written off the entire calendar year. All right, and he thinks unemployment rate's going to be 9.3% at year's end, or a 5% drop from where we're at now. All right. Here's where it got really interesting from what Jerome Powell said. All right. He basically acknowledged yesterday that they don't really care about what the stock market, how high the market goes. He might as well have just said the market could go to infinity. We're still going to print money and keep providing stimulus. Okay, that was kind of mind-blowing to me. If you had to read between the lines to pick up those things, it's like, wait, what? Because I was reading the report, and then I had to find it and listen to it just to confirm somebody hadn't made a wrong kind of interpretation of that info. So I went to the raw source. It's like, oh my God, I can't believe he just said it like that. Okay, he said, we're not focused on moving asset prices in a particular direction at all. It's just we want markets to be working. And partly as a result of what we've done, they are working. Think about that statement. Mull it over a bit. All right. And he also went on to explain that the Fed would never hold back support for the economy because it thinks asset prices are too high. All right, S&P 500 to 10K. All right, get your 10K hats. We're going to go there. So he basically said, stretch those asset valuations. I don't really give a crap. I don't look at that info. I'm just going to keep dumping money into the economy, keep rates low. Very, very, very interesting. That's particularly bullish, but at the same time, a little bit delusional. And, it's one of those things where if you're at the height of the party and the punch bowl keeps getting spiked, it's good news until you get so drunk that the ceiling starts to spin. Then it doesn't matter that the punch bowl's got more punch. You're already too pissed drunk to really do anything about it. All right, that's kind of where we're at. I found that to be, the market should be down 100 points. I think that's a good reaction. All right. In other news, coronavirus has a second wave of infections. Texas reported a highest one-day total cases ever since the virus started. Not ever, I guess, unless Texas had a bigger virus. Probably did, not the corona. All right. Now there's more than 2 million people that have contracted COVID in the United States, with over 112,000 deaths. All right. Now the worries are back to the second wave. It's not like 2 weeks ago we weren't worried about second wave. When we're moving up 50 points a day without any selling off, it's not like we're suddenly worried. It's just now it's suddenly getting attention. All right. We knew that there was a chance of a second wave. All right. When you see riots and protests, and God love the people for what they're doing. I admire anyone who stands up and fights for their rights. Don't take this the wrong way. But when you see people out there protesting, for a good cause, mind you, but they're shoulder to shoulder, you got to look at that and say, look, if this virus is contagious at all, this is going to be horrific in the next 2 to 3 weeks. And here we are. All right, cases are going up. I don't think anyone should be shocked or surprised. The market is not dropping on coronavirus second wave, right? It's ridiculous. The market's dropping on Jerome Powell. All right, keep that in mind. In Asia, Japan's down 2.8, Hong Kong's down 2.3, China down 0.8, India down 2.1. All right, Asian markets right across the board. In Europe, at midday, London down 2, Paris down 2, Frankfurt down 2.3. Futures in the U.S. all down around 3%, with NASDAQ kind of down the least. So I guess you could say it's pretty good for NASDAQ. Gold is up 1.1. Bitcoin's up 0.6%. And at 8:30, we had initial jobless claims. They didn't come out that bad at all. You guys remember weekly we have a jobless claims report. The expectation was for 1.55 million jobs to be lost, or 1.55 million new jobs that have filed for unemployment. We got 1.542, a little bit better than expected. Here's the good number, though. Continued jobless claims. These are people who are continuing to file unemployment claims. All right. It was previously 21.487 million. Now it's 20.9. So at least there are people going back to work and not continuing to file unemployment. This is actually not a bad report. And then when you look at it, this is the 12th. We got 44.176 million jobs lost in the last 12 weeks or last 3 months. But of those, half of them have returned back to work. It's unfair to use that number and throw it around and say, this is how many jobs are lost. Yeah. But the continued claims is the one of people continuing to claim unemployment benefits. Other ones have stopped claiming benefits. It could be because benefits ran out, and it's also a part of it is them going back to work. And so this is the 10th straight week of consecutive declines in that number. That's not bad at all. At 8:30 as well, we got the PPI, the Producer Price Index. Sort of looks at inflation. PPI came out higher on a month-to-month basis. Still negative year over year, but higher on a month-to-month basis for the month of May on the back of food price increases. All right, there's been food shortages, meat shortages, particularly because meat packing and processing plants, have ceased to operate or limited their operation until Trump signed an EO to get them back to work. And now they're crammed shoulder to shoulder, coughing on each other and the meat that we eat. That's it at 8:30. So next thing up on the docket, 10 a.m. quarterly services report, 10:30 EIA natural gas inventory. All right, 1 p.m. result of a $19 billion 30-year note auction. And then 4:30, we got the Fed balance sheet and money supply. All right, so Powell pushes markets lower. Let's see what we get. And I think on the open, we might get a little bit of rebound, maybe up in these 20s. And then next target down for today's session. I mean, we're at S3 already, damn near S4. So we've put in quite a bit of a sell-off. I think we recouped some of those losses early on, and we could find our way to a weaker close into the end of the day. All right, you guys be careful out there. You got to be bearish, but you don't have to be bearish right now. Remember, that's a very important lesson that I could at least attempt to teach you. Let's see some of the comments on YouTube. Iran's officially entered into the second phase wave. Not a surprise at all, I hope. And I wish Iran and its citizens the best. We got to get through this. They got hit really hard at the beginning. Pat, that's awesome, bro. Welcome. First time. Any oil news? I didn't get a chance to scour the reports, to be honest with you. Take some risks today. Maybe it works. Mikey, I'm going to get paid today, brother. I am not. On days that things have worked, it's not a time to add risk for me. It's time to get paid. Always get paid, because if you don't get paid when you have a profit, when will you get paid in this industry? There isn't any other time. All right, love you guys. Let's see what the market gives us. Will is spot on. Says, let the market give you the info. We go from there. Love it, Will. You must be a trade pro. Let's get into the room here. Let's open it up. Let's put it over to Boxy to talk about some oil levels and trade ideas, and then we'll talk equities. And let's rock it. All right, I love the team, and it's time to go trade with them. You guys take care on YouTube. All the best. Be good. Be kind. Manage your risk. Trade pro. Adios. Enjoy the volatility. All right, let me get